Good morning, everyone. Welcome to our Free Trade Agreements webcast, Demystifying Trade, HS Codes and Other Common Trade Terms. My name is Christina Murphy. I'm Austrade's FTA Business Engagement and Seminars Manager, and I'm delighted to be your facilitator today. Over the last 5 years, we've spoken to a considerable number of you directly. In fact, over 7,000 have attended one of our Free Trade Agreement seminars in more than 130 locations across Australia. And for today, I'm really pleased to say that we've had over 600 people register, which is just fantastic. While in the past we might have had the privilege of visiting your town, the current circumstances mean we're delivering information just a little differently, directly to your desks, wherever your desk might be at this time, whether it's the car, the train, the bus or the office. It's the wonders of technology. I also want to extend a special welcome to the Aboriginal and Torres Strait Islander people who are joining this webinar today. Let me take this opportunity to acknowledge the traditional custodians of all the lands on which we gather and pay my respects to elders past and present. Here in Canberra, where I am, it's cold, it's a bit chilly, but it's blue, but the people here, the Aboriginal peoples here today, it's the Ngunnawal people, so welcome. Today is our third webcast in a series of 12 designed to take you on a journey and to keep you connected and informed. If you've missed the first two webinars by any chance, they're still available online, so please go and listen to them. Our speakers are all looking forward to helping you get a better understanding of the most relevant trade terms you will face if you are either exporting or looking to export. You'll hear from Will Brook from Brook Farm, Michael Dean from DFAT, Louise McGrath from the Australian Industry Group, and Brian Clark from the Australian Chamber of Commerce and Industry. But before I get into the really interesting content, I want to make sure you're all set. So a few technical housekeeping items first up. Obviously, every good event has some housekeeping, so let me go through these. You may have noted that the boxes on your screen can be moved around or adjusted. If you get stuck, click on the icons at the bottom of your screen and these will take you back. You've all been automatically put on mute as you might expect. However, if by any chance you're experiencing technical difficulties, then just type IT help in your chat box and one of our very able technicians will reach out to you. If your internet is struggling by any chance and we lose you, please know that this event is being recorded. Later this afternoon, the content will be available on Austrade's website FTA page. You will be able to post questions in the chat box and we'll answer as many as possible during our panel Q&A session. A significant number of questions were actually submitted at registration, and even now I can see more coming in. Given this, I think we'll try to group the questions into common themes to cover as many as possible in the time available. There's also a very short survey that you'll be able to see at the side of your screens. Every event has a survey. You can access it at any time throughout this webinar, so please fill it in before you leave the call. It will help inform future webinars and importantly, it makes sure we're meeting your needs as the series continues. We'd also love you to share the webinar series with your networks. Our hashtag for the event is hashtag FTA Seminars, so it would be fantastic if you can help more people access our information. So now let's move on and welcome our first speaker. I'm very pleased to welcome Will Brook, CEO of Brook Farm, to talk to us about how his company has grown its export business, innovated, diversified their markets, plus navigated its way through COVID-19. To achieve all of this, I can promise you understanding trade terms will have been an important part of the journey. Will is a second-generation macadamia farmer, environmentalist and advocate for rural industry and employment. You can find his full bio on the website, but briefly, he grew up in the business, working every part of Brook Farm from a young age with his parents. He's passionate about how his business can benefit the community and be a leader in sustainability, innovation, health, business culture and farming. He's calling in from New South Wales Northern Rivers area, so welcome, Will. We're looking forward to your comments today. Over to you.
Thanks a lot, Christina. Good to be here. Yeah, I guess to give you a little bit of background to Brook Farm, my parents started this business. 20 years is our little anniversary this year. So they started with a passion for for farming, for the environment, and for great food. I guess the real story started 30 years ago, though, when they bought this macadamia farm up near Byron Bay, sight unseen. We turned up, it was this run-down, dishevelled dairy farm. You can see what we've created from there. So from there, we now have a fully functioning, beautiful macadamia farm, regenerated big scrub rainforest, and it's a pretty magical little place to be. So Brook Farm was one of the first, if not the first, really high-end gourmet mueslis to come into Australia that you wouldn't find handmade in a cafe. And we sold the first bags of our toasted cranberry and natural cranberry and gluten-free cranberry mueslis at the local Bangalore markets. So we've grown there. We now employ over 70 staff. We export to almost 20 countries, and everything that we do, we create in our Byron Bay bakehouse. We don't contract anything out. It's all done by us. I guess that's just a little bit of background, Christina, into Brook Farm.
Do you go about that?
Well, initially at the start, and this is a thing with Mum and Dad for all of our products. You could probably pop onto the next slide to see a little bit of the product range. Initially, it was export to the countries that you want to take holidays to. That was in the very start of the business. We don't run it like that anymore. So obviously, we started small. Started with New Zealand, which was basically like another little state from us, and then that's slowly grown through trade shows, trade visits, through some of our Austrade contacts, things like that, to multiple countries. Now our strategy really depends on classifying different markets due to population, scalability, applicability of our products into the market, and how we expect that market to grow. Key ones for now are China, New Zealand, Taiwan, Japan, really that Southeast Asia area, and so it's about 20 countries that we export to right now.
Fantastic. Over the last few days, I've been talking to you a little bit, and one of the things you talked about was navigating local laws and compliance. So perhaps you might tell us a little bit about how you manage this.
Yeah, that's a good one. It's been a intermittently steep learning curve. So especially for food products, and I'm sure it goes for others as well, different regions have different laws relating to packaging, to what claims that you can make on a pack, to allowable ingredients. The UAE is a great example that it's very strict on nutritional claims, any sort of claims, even stating that you're GMO free, which we are, but we can't state that on the pack. And then we can't be allowed oops, sorry.
So
I think I'm back.
Are you back? Okay, great.
And yeah, having your import partner having a really strong understanding of what's happening in their region, and if your packaging complies, so that you don't have rejections at port.
Great. So look, all markets are obviously different, and you were basically just saying that then. So what do you see the difference in priorities and needs when you're dealing with overseas distributors and buyers?
You really have to take each country on a case by case. Even in a region like Southeast Asia, we have a different requirement for what the customer expects in China to Japan, and even within China in the online e-commerce realm compared to retail, there are different expectations. For us, we're an Australian-made product and our key ingredient is macadamias, which are a native Australian nut. That in countries like New Zealand doesn't really fly. New Zealanders are passionate about New Zealand and don't really care that it's made in Australia as much. So that's something that we don't lead with. The opposite is true in China who put an exceptionally high value on the macadamia and the value of that in a product and the quality or even inferred quality of it. So it's really important that we tell our marketing and both product messages specifically to a market and don't try and just do a one size fits all. It doesn't work, and it wastes time, energy, and dollars.
Fabulous. So I guess the thing that's on everybody's minds at the moment, you can't avoid it, is COVID-19. And I'm wondering how this has impacted your business and if it's made you do anything differently.
Yeah, I mean, we felt COVID-19 back in February, late January, February, when it hit China, as that's one of our larger export markets for us. That essentially they were shut down. Our distributor was stuck in their apartment block and weren't able to get out for somewhere around a month. All the retail sales really dropped. So that's where we had is it fortunate or unfortunate that we were able to see this thing coming a little bit earlier. So we were able to make some step changes within the domestic business to ensure that we had enough product to get to all the independent grocers that take our product, your Harris Farms, your IGAs, everyone like that. So we were able to be prepared there. And then we were also step changing to really focus on the e-commerce side of things. And we've been able to maintain that through the other side of COVID as well. I guess the other thing is making sure that we're diversified enough in export, because the other countries, particularly in Southeast Asia, have not been as adversely impacted, which has been great for us. So making sure that we're diversified, not only in Australia, but in export markets as well.
Fantastic. I love to hear that word diversification, Will. You talked about the e-commerce. Are there any kind of tips or strategies or things you can tell us in just a little bit more detail on the e-commerce side of things?
Yeah, sure. I think the first thing is that we are able to provide an experience that is that's superior. So making sure that if you're buying a Brook Farm product, that we might give you a little something special for buying with us online and make it feel like it's not an onerous process to buy our products online. Nice, quick dispatch, those types of things. The other thing is it's a way better opportunity. We've got such a deep story with everything we do with the farm, the environment, our products, the ingredients we put in. We make sure that we can really tell that story because we're directly talking to people through B2C. So really making sure that when we have an opportunity that we can tell everyone about all the good things that we do and that we're prepared with that type of material and content. And really it's just telling people what we really do, and you can't do that on a retail shelf.
No, that's very true. And you do have some great products. That muesli is pretty good. And, I've tried a few of your products, so I know they're good. Look, we're nearly out of time, but I'm just wondering if you've got... Sorry, Bill, go.
No, all good. Go ahead.
I was just going to say, we are nearly out of time, but I just wondered if there are any, final lessons or that you've learned along the way or tips that you just might like to give just before we finish.
Yeah, I think that compliance piece is massive, particularly with labelling laws and making sure that you have a really good matrix of what's allowed with your products. Otherwise, you will waste a lot of time. And the other thing is taking your time to find a good export partner in the region that you're dealing with. The worst thing you have is someone doesn't go well. Every 2 years, you're rotating through exporters, and we're very conscious of the time that is required to vet and make sure that our partners are aligned, they understand the value of our product, that it's not just price. And if they can understand that and sell it with that message, then that's also going to get to the consumer in any region that we're that we're dealing with.
Thanks, Will. Look, I really want to thank you for your valuable insights and for the time you've given us today. It's fantastic. And for our audience out there, don't panic. Will's going to be on the panel a little later. I'll call him back when we do our Q&A, so there'll be an opportunity to ask him questions. Thanks, Will.
Thanks, Christina.
Thanks. So we've also got with us today Michael Dean here from the Department of Foreign Affairs and Trade, and he's going to briefly cover a few trade terms that potentially will fall outside the ones that will be covered by Louise and Brian when they talk to you a little later. He's focused on trade advocacy and has extensive trade agreements experience. He's worked on both the Trans-Pacific Partnership Agreement and Pacific Agreement on Closer Economic Relations Plus negotiations, just to name a couple. He's coming like I am from Canberra today. Are you on the line, Michael?
Yes, Christina. Good morning, everyone. Thanks for the handover. As Christina mentioned, I'll be covering a few commonly used trade terms so that hopefully you can more easily export in the future or use our free trade agreements to export. Next slide, please. First term I'd like to explain is the World Trade Organization, or as it's also known, the WTO. The World Trade Organization is the multilateral institution dealing with rules of trade between nations and economies. Australia has been a member of the World Trade Organization since its creation in 1995, and its current membership is around 164 economies and nations, so that gives you an idea of the size and importance of the World Trade Organization. Its main goal is to ensure that trade flows as smoothly and as predictably and as freely as possible. You can break the World Trade Organization down a little bit further by saying it's a forum by which members negotiate trade agreements aimed at reducing obstacles to international trade, and it's also has a framework for the implementation and the monitoring of those agreements once they're implemented. And thirdly, it has a framework for settling disputes between members. So it has all those things. Of course, there is a complex web of agreements underlying that, but that's essentially a brief description of the World Trade Organization. Next slide, please. This slide introduces the term free trade agreement, which is an international agreement between two or more countries or economies that reduces or eliminates certain barriers to trade and investment. These agreements also provide greater certainty and transparency for our exporters in other markets. And this slide shows you the range of our free trade agreements. Then there are generally two kinds: bilateral free trade agreements, and they're shown across the top there, starting with New Zealand, which the New Zealand Free Trade Agreement entered into force in the early 1980s. And we've negotiated and implemented a range of bilateral agreements since then. And the newest free trade agreement of a bilateral nature will be our agreement with Indonesia. That enters into force and is shown on the right-hand side there on the 5th of July. So just a couple of weeks away. And the other kind of free trade agreement we have are regional free trade agreements. And towards the bottom of the slide, you can see icons representing our two regional free trade agreements we have. One is known as ANZFTA, the ASEAN Australia New Zealand Free Trade Agreement, and the other is known as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, or the CPTPP, or some people know it as the TPPPP. And we have quite a range of agreements. We're also negotiating with the UK, EU. So the government has quite an active agenda here, which will increase our number of in-force free trade agreements over time. Next slide, please. Now I'd like to move through a couple of terms that some of you may be familiar with and some of you not. A tariff is a tax on imports of a particular commodity that's not applied to domestically produced products of a similar nature. And they can be levied either on a percentage value compared to the value of the product, say 10%, That's known as an ad valorem tariff, or on a specific basis, and that is, for instance, a dollar value per tonne or a dollar value per litre. They're the two types of tariffs you get, ad valorem and specific. A tariff binding is a commitment not to increase a rate of tariff above an agreed level. And the other term I'd like to explain with regard to tariffs is a most favoured nation tariff, or MFN tariff. This is a non-discriminatory tariff that's applied to imports sourced from all trading partners. So you can think of that as the general tariff rate that applies. And if a country has a free trade agreement, the free trade agreement preferential tariffs will be lower than the most favoured nation tariff, or the MFN rate. Next slide, please. A quota is simply a limit which specifies the maximum amount that can be imported over a given time period. And the next term I'd like to explain is a tariff rate quota, which is a combination between or a combining of tariffs and quotas. You'll have an in-quota tariff rate, which is applicable to an imported product up to a certain quota limit. And then you'll have the out-of-quota tariff rate, which applies to the same imports where they come in above the quota level. And usually the out-of-quota tariff rate is higher than the in-quota tariff rate. Next slide, please. Final term I'd like to explain or go through is non-tariff barriers, and these can be any type of red tape or trade rules in other countries that have unjustifiably restrict the flow of goods and services exports. These non-tariff barriers can occur at the border, where products or goods or services enter an overseas market, or behind the border, where goods or services are traded with overseas markets, within overseas markets. Of course, governments can apply trade measures to have an impact on product trade, and that's justifiable in the sense of protecting, for instance, human health, animal health, plant health. We have our own quarantine measures, which are quite legitimate. We have our own measures with regard to food labelling, for instance, which are also quite legitimate. However, when we have trade rules applied that are not transparent, they're overly restricted, they're arbitrarily applied, or they're inconsistent with our World Trade Organization obligations or other countries' obligations, they become more likely to become trade barriers or non-tariff barriers. Australian exporters can report these concerns they may have with unjustified non-tariff barriers that they're experiencing in other countries via the website mentioned on this slide, tradebarriers.dfat.gov.au, and it'll be considered by people and hopefully addressed. That's the end of my presentation. Happy to participate in the panel session later on, and I'll hand back to Christina.
Thanks, Michael. We'll hear from you a bit later. I'm sure people found those terms useful. I'd now like to introduce Louise McGrath from the Australian Industry Group. She's going to talk to you about HS codes, certificates of origin and rules of origin. She's got a broad range of experience in international relations, including trade missions, business development and delivery of export-related training programs, as well as advising business on export planning and marketing. She's responsible for international engagement at AI Group and also represents Australian industry in a number of multilateral forums. Louise, do we have you on the line?
Yes, here I am. Thanks, Christina. As Christina said, my name's Louise McGrath and I am General Manager for International Competitiveness here at the Australian Industry Group. Next slide. Next slide. So HS codes. What are HS codes? They're sometimes called customs codes or tariff codes, but they're a very useful and essential element of international trade because it standardizes the coding system to identify goods that are traded. Standing in front of a customs agent or official is not the time to be arguing whether it's potato scallops or potato cakes. So we need a system where, regardless of brand names, local usage, language, we have an identified common way to identify a product. And we all know that it's potato cakes in any case. So you can see in this example, we've just highlighted an example of how this process works. So if we look at the top heading, section 4 is prepared foodstuffs or manufactured or processed food. Then we get down to chapter 20, which includes all preparations of vegetables, fruit, nuts, and other parts of plants. So remember, chapter is 2-digit level. We have a heading of a 4-digit level, 2008. We get down to more detail, fruits, nuts, and other edible parts of a plant. And we get to subheading, which is 6-digit level, nuts, ground nuts, and other seeds. And it's at that level that we find how your product will be classified under a free trade agreement, both in terms of what tariffs will be applied and usually what rule of origin you need to comply with. And then in individual markets, it might get down to 8 digits or even 9 digits into more detail, in this case, roasted ground nuts. So the key points that I want you to remember from this slide are those 2-digit level chapter, 4-digit level heading, and 6-digit level subheading. So I'll quiz you on those a little bit later. One of the challenges with the HS code, though, is that it is not a dynamic system. It's quite clumsy, and you can imagine with every product in the world somehow having to be classified, they won't all be individually named. So if you have a very innovative product, or something that is a little bit unusual or unique, it won't probably be listed as such. It will probably be at a 6-digit level, which is sometimes just other. So I remember my customs lecturer complaining that for years he classified clocks and he classified radios, and then someone invented a clock radio. So what was he to do with that? So as innovation occurs, it does get fine-tuned so every 10 years or so. But so if your product's not identified, don't worry, there's still some way to identify it. Next slide. So what should you do? Fundamentally, what we would like all exporters to do is to invest some time up front to properly classify your good. This gives you all the power to get knowledge, to use FTAs, and also just all trading effectively. It means that you can have the right documentation to prove your classification and also reduce risk of penalties or paying too much duty with the wrong classification. It's difficult to get a binding tariff classification as an exporter because customs really only like to deal with importers. So it can be worthwhile working with your importer or your customer to get a binding classification from their customs official. Home Affairs or Border Force do have a tariff advice line, but it can be a little bit clogged and can take some time. Over the years, the only product I've ever really had trouble classifying has been a meal kit, which had a take-home meal kit, which had a brioche bun, a burger, beef burger, some pickles and some aioli, all complex rules of origin. So HS codes aren't great for those sorts of things, but every other product should have a code. Next slide, please. But if you don't already have a customer or you don't have time in terms of doing your planning or just you'd like to know what your HS code is, this is a great free resource set up by the government. It's a fantastic resource. They really should be congratulated on how user-friendly this is. You type in your product name. If you know the HS code, you can put that in. But if you don't, type in the product, type where you choose what export market and the direction of trade. The best thing about this is that it uses real language. So under the HS code, computers are data processing machines. Beef is listed as bovine, very technical terms. So you'll be able to put in computer parts or computers, you'll be able to put in beef, and you'll get the right HS code for you. Next slide. So rules of origin, these are the key concepts. There's many different rules of origin to be Australian origin under a free trade agreement: wholly obtained, goods produced entirely from originating materials, regional value content, and change in tariff classification. They're the four I'm going to focus on. I've got different colours. They don't really indicate good or bad. All are equal. If you meet the threshold, you are Australian origin, and you can use the free trade agreement and take advantage of those tariff concessions. Next slide. So rules of origin for wholly obtained. These are very easy. Natural products, products that have been extracted. So the macadamias, for example, grown in Australia, can only be Australian origin. They are wholly obtained. Next slide. Goods produced entirely from the Australian goods and materials. This is the one that makes me most nervous. So this one, the exporter is saying all inputs originated in Australia. So if you're making paper, the trees are planted and grown in Australia, cut and pulped in Australia. The chemicals, all chemicals come from Australia, and all the dyes produced in Australia. Not bought from Australia, but produced in Australia. This is difficult to prove, and I find most challenging. Next slide. Now, every product, as I said, once you have your HS code, you can work out what your rule of origin is. So quickly, you can see on this example, the product-specific rule of origin. Now, this is the quiz that I asked you to remember. CTH, change of tariff heading. If you remember what that is, 4-digit change. Change, next going down, CTSH, for filled chocolates, change of tariff subheading. And then chapter 19, chapter 20, you can see CC for change of chapter. So what we're looking for there is a change in those numbers. So a change at the 4-digit level, or the change in the 6-digit level, or in the last example, CC at 2-digit level. But in this case, there are two rules that the exporter need to comply with to be Australian origin. They need to, in the cocoa powder, they need to have a change of tariff heading, as well as a regional value content of over 50%. Next slide. So here's a basic example, description of change of tariff classification. So we're changing the classification, the tariff, the HS code of any imported inputs to, and we're changing in the process of making the exported product, we're changing the HS code. Next slide. Okay, so this is an illustration of what I'm talking about. See, we're making sweet biscuits. The sweet biscuits HS code is 1905.31, made in Australia. However, they're chocolate and walnut biscuits. We've imported the cocoa powder from Holland, HS code 1805, vanilla from the UK, HS 0905, walnuts from the US, HS 0802. Flour, butter, sugar, all produced in Australia, we don't need to know those HS codes. This product-specific rule says we need a change of chapter. Remember, change of chapter, 2 digits. So we're looking at the first 2 digits, 19. Have we changed those digits from the imported components? So Holland, 18, UK, 09, USA, 08. They have all changed into a new product called 1905. We've changed the first 2 digits of that HS code. That means we're complying with the rule of origin, and we can export those using the free trade agreement that this rule comes from. Next slide. So regional value content. This is when we deduct the value of the non-originating product and we get a percentage. Next slide. Here's the example. We reduce a product to the value, FOB value of $200. The CIF value of the imported components is $60 times by 100 divided by 200. We get an RVC of 70%. If you remember, originally that rule further on was 50% minimum RVC. We've got 70%. We meet the rule. Next slide. So after all that work, you think you might be ready to export? Not quite yet. You then need the documentation to use the free trade agreement. Some cases you need a certificate of origin that needs to be issued by an authorised body, such as Australian Industry Group or your local chamber. Generally, the CEO applies to a single shipment. It may cover 1 or more goods. Some agreements, though, the CEO may apply for 12 months. You have to look at the detail, and it's generally valid for up to 1 year. However, with all our free trade agreements, there's enough difference to cause a bit of friction, so you do need to look at the details that applies to you. Alternatively, in some agreements, you can do, as an exporter, a declaration of origin, which means that you issue the document yourself, you make your own declaration, and you don't need to have that certified by anyone else. Next slide. And this is my last slide. This covers some of the most popular free trade agreements that our members use, and detailing whether it's a third-party COO or a self-declaration with a set form, or sometimes, worst case scenario, no set form. So you can see the US, no set form, you just somehow need to convince your importer that they're of Australian origin. Thailand, FTA, you have to use the third-party certification. Some cases, for instance, in Japan, the Japan FTA, you have an option of using a third-party certified certificate of origin, so stamped by AR Group, or you can self-declare. And really, if you're going to decide on that, work with your importer and understand what it is that they want. But for Japan, for example, I do know that around 80% of exports using the Japan FTA do self-declaration. If you're going to change what you're doing, talk to your importer. But essentially, if you approach a third-party certifier asking for a certificate of origin, won't question your judgment. They'll assume that you know what you're doing, so you need to empower yourself with this knowledge yourself. And one last slide, next slide. So I know this is really high level, you could do a 3-year degree on this 8 minutes. So if you do have any questions, feel free to book 30 minutes with myself or my colleague Shirley Ng to understand what your supply chain footprint looks like and how it matches our FTA architecture. Back to you, Christina.
Thanks, Louise. Coups, roos and HS codes, really important to get right. So thank you for sharing your expertise with us. And once again, Louise will join us on the panel in a little while. So our next speaker is Brian Clark. He's from the Australian Chamber of Commerce and Industry, or ACI. Brian is going to focus on Incoterms, very important when it comes to shipping your goods. He has over 25 years experience in international policy development and leads the Australian Chamber's International Chamber of Commerce Policy Unit with courage of policy development and advocacy for free trade, along with managing the responsibilities as a National Committee of the International Chamber of Commerce in Australia. Brian, have we got you there?
Yes, Christina. Got them there. But thank you very much to Austrade and Christina for inviting me to speak today to your audience around Incoterms. I don't know if it's something which is widely known about inside the Australian trading community, but it certainly should be. And the other important thing to understand is that this is also one of those decadal or periodically reviewed systems around the world which is used, and this is the 2020 version of them that I'll be referring to. They changed and came into entry into force on the 1st of January this year. So if you're not familiar with the new terms, they're quite similar to the old terms, but some have changed. You need to make sure that you're familiar with that, and the information is available through the International Chamber of Commerce. Next slide, please. But what I want to move on to is what are Incoterms? So Incoterms itself is a shortened term for international commercial terms, and they're used inside your contract of sale. So you need to know what your sales teams are using when they contract for the trade that you're about to be undertaking or over a period of time. And they refer to the responsibilities that certain aspects of the transaction, where those roles and responsibilities fall between buyer and seller. And they shouldn't be confused with the customs terms. There are very similar sets of terms used in customs, also referred to as Incoterms, things like customs valuations, where you might be asked for an FOB valuation to be supplied at some point in time. And you need not have the two, what you're in your contract terms and what you're using for customs clearance can be different. So you need to be aware of the differences between the two and not to confuse them. And the other important thing is Incoterms never refer to exporters or importers. they only ever refer to sellers and buyers. So they stand the parties together around what transaction are you doing, and then you need to have worked out which is going to be most appropriate to you, and a collective term might be traders. So again, this is quite a variation from where many presentations go about exporters and importers. It's just buyer and seller. Next slide, please. So the first thing you want to do is, everyone expects that their trades are going to go well. And once you've done your deal and the goods are on their way, you think everything's fine. But history shows that it's not. And, not often, but sometimes you end up with products that don't reach their destination or are not in a suitable condition for the customer by the time they've got there. So you had to have worked out across that transaction who was going to be responsible for what. Just producing it and selling it at your product location, your production location, doesn't obviously get it to the buyer at the other end. And so there's transport that's involved, there's insurance that needs to be taken into account, and those roles and responsibilities transfer according to what Incoterm you've used. So this is really important to understand. Next slide, please. So I don't intend to go through every one of the terms and explain them. I didn't intend to do an educative piece like that, but more just to highlight the types of terms they are, and to also make sure that everyone understands they are grouped together according to the mode of transport. So they have different starting codes, and Incoterm is the 3-letter acronym. So like X Works, the top one there is EXW, commonly used. So that means that if you, in your contract, sell your products X Works, that means you are paid for the goods to be picked up at your site of production. And you have no responsibility whatsoever for getting it to the buyer's site. If the buyer is either domestic or international, you can use that term for that. It has nothing to do with the trade agreement because you've sold your goods at your site and somebody else is responsible for picking that up, and it's not your responsibility to work that out in order to get it to the buyer. So for any mode of transport, you can use the set, which is here, X Works, FCA. Next slide, please. CPT, CIP, DAP, DPU, and DDP. Each one of them expresses a different location of where the goods need to get to for point of exchange between the buyer and the seller, and the change of responsibilities. So by the time you've got from X Works from the last slide through to delivered duty paid, that means that delivered duty paid is you've taken responsibility for the goods all the way to the delivery site nominated by the buyer. And it's your responsibility to then arrange the transport, and your responsibility to deal with the insurance and other products in case the products suffer some sort of misadventure in the journey. So it's really important to have worked out which one of these is going to be most suitable for the type of business you're doing. If I can have the next slide, please. Now, for sea or inland waterways, and only for bulk and break bulk, not for containers, then there's another set of Incoterms that you should be using. So again, traders need to understand what's their mode of transport, and then which is going to be their most applicable common Incoterm. Now you'll see FOB here, free on board, which is very commonly used, and I suspect very commonly misused in many trades. And it's probably because of the culture associated with needing to provide an FOB valuation for customs valuation as opposed to what's in your contract. So again, beware of what term you're using and how you're meant to be using it. But free on board is a very historic term that's been around for a long time and refers to the transfer of the goods across the rail of a ship. In early days when that was perhaps a more defined term on a ship as well. And so if your goods were in a cargo sling while ever it was on the dock side of the ship, that's your responsibility. But when it had reached the line and got over the ship, if it fell out of the cargo sling, that was not your responsibility. So this is why these terms are really important. Many have been around for a long time, but understand modern nuances to them all. Next slide, please. Now, in this slide, you can find these sorts of tables on the internet from time to time. A number of the shipping lines provide them. It's a useful sort of guide to visually understand where change of responsibility occurs. So, as I mentioned before, if you've used Ex Works, then the buyer is fundamentally responsible for most of that journey process, whereas at DDP, it's the seller who is responsible for most of that process, getting it between the site of production and the site of purchase or consumption. So this is the important thing to note around free trade agreements, is that often enough, if you've used an Ex Works or an FOB common term, you aren't actually responsible. Michael has pointed out the tariffs themselves are paid by the importer. So you've got to understand who was responsible. And you can see down the bottom of the slide here is import duties, taxes, and security clearance. And that responsibility falls always to the buyer, with the exception of the contract term DDP. So unless you've used DDP, you're not actually involved with the compliance arrangements for the free trade agreement. The importer is responsible because they have to deal with all of those components that they're responsible for. So the issues which Louise has then spoken about often enough transfer back because the importer needs to provide the compliance details. And the importer doesn't just trust the statements that are being made by people. They want to see documentary evidence so that they don't get in trouble, because in many jurisdictions, including imports into Australia, making a false and misleading declaration to a customs authority or a border authority can be a very serious offence, attracting serious fines and or other penalties. So you need to be really clear that you know what it is. You don't want the circumstances where you've sold your goods Ex Works and you've wondered why your goods are still there when you're expecting the buyer to have picked them up. Well, so that is the case. He should have done it in those instances. But if you've sold it as a different term and you're wondering why your goods are still there when you're expecting them to pick it up, when you should have used an Ex Works, you need to have got it the right way around when you deal with it. Next slide, please. So this is the critical things that I'd like to just leave everyone with is, firstly, make sure you understand the Incoterm 2020 that your sales teams are using, because it makes all the difference to whether or not you're able to take advantage of the trade agreement or not, or you're leaving something on the table. But irrespective of use of a trade agreement, these are the common terms that you might use, and they're understood in many countries around the world, irrespective of language differences, etc. So they're really important. The second thing is that preferential trade agreements, so I prefer to use that term, are about preferential access, saving the tariff in the country of import. This is for goods trade, of course. So you need to have understood who was paying the tariff in your transaction, and the choice of Incoterm will determine that. Now, moving on, a little bit of nuance in that is a lot of companies also, because they don't want to be revealing their costs of production to their commercial clients in another country, often enough establish a related company so that you're selling to yourself effectively, and then you can remove some of the details that might be exposed in some of the documentation. So again, it's more complex, but you need to be thinking about what you're doing. And the other thing is, are you providing that discount to your buyer? And so you need to have understood the tariff saving isn't a saving to the exporter, it's a saving to the importer. So if you're happy for that to happen, that's terrific. And perhaps there's a demand change because your price, or the price the buyer can buy your goods for, is that little bit less from the tariff against somebody else's goods that may or may not attract the same or a different rate tariff, depending on what country they're coming from. And that may be fine, just so long as you understand it. But the other thing to consider is maybe you should also see if your pricing is the right way around, and maybe consider that you should change your pricing to reflect the benefit of the tariff concession that is potentially available to your importer. If you want to capture a little bit more of that, it depends, of course, on what the market will stand, but you need to have understood that change and who is doing it, so that you make sure that the benefits are flowing the right way, that you're getting the demand response and you're getting the price response that you're expecting. Last slide, please. There's a lot of information about Incoterms, much the same as HS codes and other things that are available on the internet. There is an app these days for it. You can get one on your phone. You can understand that, and you can get a whole lot of additional tools, the booklets, quick reference guides, etc., at the website from the International Chamber of Commerce, which is there on the screen. So thank you very much, Christina, and over to you.
Thanks, Brian. I think it's fair to say that Incoterms can sometimes put a bit of fear into exporters, but you've done a great job of unpacking the terms, so thanks very much. I know that we're running a little over time, but this has been fantastic. I think that we've had fantastic information from our speakers. So I want to get into the panel discussion now, and I'll try and not cut that too short. So if I can bring the speakers back and thank them for their presentations, and let's get right into the panel session. So, Michael, I've got a question for you. We've actually had a few questions around this. How can we find out if our products fit into the FTA, and how do exporters choose which FTA is best for them? Is there some kind of tool that they can access?
Thanks, Christina. Thank you, Christina. Yes, the short answer is, can you hear me? Yes.
Yes.
The short answer is yes. The FTA portal that Louise highlighted in one of her slides is a great tool because it allows you to enter into very simply and very user-friendly way information about your product, whether or not you're importing or exporting, the market you're interested in, the FTA market you're interested in, and that will give you some information about the preferential arrangements, whether it's a lower tariff or eliminated tariff for a good, or the services arrangements for that FTA. So this is a product that Louise has highlighted, which very much allows you to access easily information about our free trade agreements and how it benefits your product potentially. And it also, where we have more than one free trade agreement with a particular market, say Japan, we have the bilateral agreement. We also have the CPTPP agreement that I mentioned, which is in force between Australia and Japan. So that provides a comparative tool. Say you've got one product, gives you the tariffs on one side for the bilateral, and it also gives you the tariffs under the CPTPP. So it's a great comparative tool where we have more than one FTA with a country.
Thanks, Michael. Louise, I might come to you because Louise, I might come to you. We've had a few questions about navigating HS codes, how to find them, which Michael's just covered a bit of, how to get official classification, and what to do if you think customs has allocated the wrong HS code. So have you got any examples perhaps of any circumstances where an exporter has landed their goods and the customs has told them that their HS code is wrong or they disagree with it?
There sometimes are examples of cases of that, but usually the dispute is between the importer and the exporter, I find. But as Brian highlighted, it is an offence to make a false declaration to a customs official. So most companies are quite careful to avoid that and will carefully use the code that is correct for their product. And if they've got a binding classification, then that resolves all arguments. The real challenge, as I said, is those innovative products that could be interpreted in one or two categories. So there might be sometimes a dispute in that regard.
Thanks, Louise. Will, still on HS codes, because we had a question directly for you, whether you've got someone internal that's responsible for dealing with HS codes, or do you use customs brokers and freight forwarders?
We do use customs brokers and freight forwarders, but in terms of HS codes, we handle that in-house. Many years ago, that was something that I was responsible for, and to date we've had very few issues. I would highlight for everyone to be making sure that you're really specific, particularly in food, in your product makeup, that you match the correct tariffs and HS codes. And Brian alluded to it. We made an error in what we expected the price of a product to be. That was different because a tariff was applied in another country, and essentially the market was, we outpriced what we thought the product was supposed to be. So it is really important to make sure that you're onto the specific nature of your product and how it applies in each region.
Thanks, Will. And I might just ask you one more question while I've got you, because we've had a question about the most effective way of finding a good partner and whether you've used any platforms or events to do that, what initiatives you've used.
So we've used, often for the Fine Food Australia is a great one because we have a lot of importers coming through. That's obviously not happening this year because of COVID, but we've found some really great people from that. Also the connections through Austrade. We've had that be successful for us in multiple countries, but going on further from there, using our own network and actually just not being afraid to ask the question, if you know one of your friends, co-businesses, something like that are successful in exporting, just asking them who their partner is, and if an introduction is appropriate, as long as you're not competing. That's probably the third, and I guess all three are as effective as each other.
Thanks, Will. Brian, we've had some questions about how international transfers work, letters of credit and payment settlement terms. Can you briefly give us a little bit of advice around that?
It's a difficult topic, and I think fundamentally you need to be talking about an expert advisory service, which your bank and others can provide you with. But the fundamental thing around trade and trade finance is making sure you get paid. So you don't want to have the situation where you think you're doing a great thing and you've got your goods landed in another location, and suddenly there's a dispute and you're no longer paid, or something has gone wrong. We understand from our banking members that open account trade had gained a level of favour prior to coronavirus, but I'm suspecting that there's a much higher risk profile that people are going to want to look at now. And products like letters of credit, and there are other products around as well, can help to improve the security of your payment systems and making sure that everything works smoothly. I think it's a great topic for another detailed session with some bankers, but the fundamental principle is that instead of just trying to exchange money in an account given to you by somebody over the internet, which may or may not be the real buyer, you have two confirming banks that sit in between that, who guarantee that the payment occurs against some contract terms. And so once the contracts have been satisfied, then the banks release the payments between the various parties to ensure that you get paid on time and the right amounts of money without a dispute. So look into that because it's really important.
Thanks, Brian. Look, I've got one last one that I want to talk about, and that is that we've had a lot of questions about IP, and I wanted to let people know that one of our future webinars is going to focus exactly on that, on IP. So we will get into a deep dive there, and I'll not really talk about it now, but just very briefly, I will give Will a chance to talk about how Brook Farm has managed IP.
Yeah, sure. So in terms of IP, that's one of those things that we most certainly 100% outsource to an expert in trademark and IP law for each of our markets. There's a few of the ones that that we play in, specifically in China. It's not only for protection for us, but protection for our import partner, that we know that they're not getting counterfeit Brook Farm product happening on the shelves. So we defer to our trademarks lawyer to ensure that if we create a new product, some sort of new innovation, if it's new branding, naming conventions, all of those things, that we're fully protected in the markets that we play in. And I'd probably also say that if there's something that you don't think is worth protecting, don't worry about protecting it, because you're just throwing away money that you could be spending on marketing and sales and things like that. So just make sure you know what you actually want to protect rather than just protect it all and pay a lawyer for his new pool.
That's great. Great advice. Thanks, Will. Now, look, we really are very, very over time at the moment, but I want maybe one quick from all of you. I'll start with Louise. 10 seconds, one tip you might have for everyone.
So Michael helpfully described in the FTA portal you can compare agreements. It's not just comparing rules of origin, it's the tariff rate, it's also comparing the rules of origin. And as I detailed, some rules are harder to comply with than others. So you really need to be careful. Sometimes you might have a lower tariff rate, but a harder rule to comply with that doesn't match your supply chain. It's also really important to remember that those rules are being negotiated right now in our future free trade agreements. And heads up, if you export machinery to the EU, imported components make it very difficult to comply and you may be excluded from the FTA. So please get in touch if you want to advocate on your interests in that regard. Thanks.
Brian, quickly.
Thanks.
Look, thanks, Christina. I'd just like to reinforce the components of my presentation is Incoterms are really, really important, and they are globally accepted and known. You don't have to make up the points and responsibilities for your international trade if you're using a standard Incoterm. So make sure you understand them and make sure you know the difference between contract Incoterms and customs valuation Incoterms.
Thanks. And Michael Dean, quickly, and Will, I might count your last one as our last tip if you don't mind, but Michael, can you just give us 10 seconds very quickly?
Sure. Just three things to mention. The World Trade Organization website has a great glossary if you want to look up more trade terms than we've covered today. The FTA portal is a great user-friendly tool for finding out more about our free trade agreements and the opportunities they provide. And the DFAT website, which can be accessed via fta.gov.au, has a wealth of information about our free trade agreements, including those that are being negotiated, such as the EU and UK FTAs.
Thanks. So, Will, is there anything you want to add? Because I'm going to go, but you've been a great guest speaker, and I want to just give you one chance if you've got anything else you wanted to add. Oh, I think we've just, have we lost Will suddenly? Okay, I might actually then move on. So we have coming to the end of our session today. I want to thank all of our speakers, a virtual round of applause for doing such a fantastic job. I also want to thank our audience, to you as well, for all your questions. My apologies if we didn't get to answer your question today. We've had a high volume of questions, so it's been a little difficult to answer them all, but we will try to come back to you on some of these. If there's a topic you really want to hear more about, please include your comments in your survey. This is your chance to actually help shape future webinars and have your say. That survey is on the screen. Please fill it in. Speaking of our next webinar, it's on the 9th of July and it's being delivered jointly with the Australian Indonesian Business Council. It's part 1 of 2 webinars on the Indonesia-Australia Comprehensive Economic Partnership, which comes into force on the 5th of July. You'll hear directly from a range of businesses, including the Minister for Trade, Tourism and Investment. There will be a link to it shortly, so please watch out for that and share it with other colleagues when you have access to it. I look forward to seeing you at our next webinar with our friends AIBC on the 9th of July. And on that note, thank you and goodbye from me.